guys? My name is Lauren and welcome back to my channel where we talk about money and mindset as well as my family's own journey to pay off six-figure student loan debt. So if you like videos like that, then make sure you hit the subscribe button so you don't miss any new videos. Today we're talking about everything that I've invested in my Roth IRA. Now, this is not financial advice. I just want to put that out there immediately. This is not financial advice. I am not an investment professional. I'm not a certified financial planner. I am a former attorney, but this is something that a lot of people ask for. They want to know what I'm invested in. And honestly, it's so much simpler than it seems at first glance when you're not familiar with investing. I know how intimidating investing was for me when I first started. And if I had known what I know now, I would have started a lot earlier and been way less intimidated by it. So that's why I'm sharing this, because I do get a lot of comments asking me what I'm invested in. And so I thought today I'd share with you exactly what I'm invested in my Roth IRA. Now, a Roth IRA is a retirement account. For this year, for 2022, you can put up to $6,000 into a Roth IRA if your income is under a certain limit. So there are income limits for a Roth IRA. There's actually a way to get around that through the backdoor Roth IRA, which is what we did last year. So I'll put a link to an IRS article that says all of the income limits and stuff for contributing to a Roth IRA for this year. But anyway, I have had my Roth IRA since I think I was 30 years old, and I'm gonna be 35 in a couple months. So I've been contributing to it slowly. It actually doesn't have that much money in it at this point. Let me just take a look and see if I can find quickly how much is in there. I think it's about $12,000 at this point that's in there. So last year was the first year that I maxed it out, and this year I don't know if I'm gonna be able to max it out again, but I hope to put something into it at least this year. It's a great account. The way it works is you put in after-tax income, so whatever money you get paid from your employer, or if you're self-employed, whatever income you take from your business, you can then put into this account and it grows tax-free. And then when you're ready to take money out of the account, you get to take it out tax-free as well. No income tax on the growth or the withdrawals because you already paid tax on the money up front. So people really love this account. It's a really popular one and I really enjoy it as well. So let's take a look at everything I'm invested in my Roth IRA. And spoiler alert, it's only two things that I'm invested in. Okay, so to start out, my Roth IRA, I have at Vanguard. Vanguard is a brokerage. So the way it works with investing is you pick a brokerage, you then pick an account type, you then pick the investments. So the brokerage I am invested in for my Roth IRA is Vanguard. The account type is Roth IRA, and then the investments I'm about to tell you. So 2/3 of my money is in VTSAX. So VTSAX is the Vanguard Total Stock Market Index Fund. So basically, if you invest in VTSAX, you're getting a piece of every single company that's publicly traded in the United States stock market. And because it is an index fund, it is passively managed, so there's no people who are hired to actively trade within the fund. It just follows the index for that index fund. So in this case, it's the total US stock market index. So it has a low expense ratio, and the expense ratio is how much you are charged for investing in the fund. So there are actively managed funds and passively managed funds. And for actively managed funds, the expense ratio it ranges, but it's usually 0.5, 0.7 or higher. And for a passively managed fund like VTSAX, the expense ratio is 0.04. So when you're thinking about interest rates, that makes a big difference over the course of the long term. It may not sound like a lot, but it really is a huge difference. So 0.04% is pretty much as close to zero as you can get. It's a very, very low cost index fund. So I really like VTSAX because it tracks the entire US stock market. You also really do have exposure to the international market because a lot of the biggest companies in the US have investments in business that they're doing in other countries. So even though it's just the US stock market, you have some exposure to international as well. And it's a very, very popular fund to invest in. And the way I learned about this fund is through my favorite investment book, which is The Simple Path to Wealth by J.L. Collins. I mentioned this in many, many, many videos because I just love this book so much, and I will link it in the video description below. It is the best book on investing I've ever read. It's so straightforward and clear and written in a way that anyone can understand, beginner, advanced, whatever level you are. It's very approachable and it just has such good information. So I learned about index fund investing I think before this book, I think I learned about it from Tony Robbins' Money Master the Game book. I think that's the first time I heard about index funds. But this one really broke it down. The Simple Path to Wealth really broke it down in a new way for me. The author of The Simple Path to Wealth is a very big fan of VTSAX. It's also a very popular index fund in general. So the nice thing about index funds is, you know, rather than having to pick one stock like Tesla or Apple or whatever and just have all your eggs in the Tesla basket, you get to have your eggs in the basket of every single company that exists or whatever the index tracks. So for example, there's like S&P 500 index funds, which means you're invested in the 500 largest companies in the United States if you invest in the S&P 500 index funds. So just index funds in general are great because they're passively managed, which means they have low cost, and a lot of them track a large portion of the stock market. And so you have exposure to a lot of different companies rather than having to pick and choose single companies and do any research on companies. And study after study has shown that statistically investing in an index fund will give you a higher likelihood of the best return than individual stock picking or actively managed funds. So don't take my word for it, Google that. You can look up actively managed funds versus passively managed funds, or actively managed funds versus index funds performance over time. Maybe in a given year, an actively managed fund will do better, but over the long term, the majority of actively managed funds underperform these large index funds like an S&P 500 index fund or a total stock market index fund like VTSAX. Okay, also VTSAX is all invested in stocks, no bonds, and so bonds generally have a lower return but are less risky with fluctuations in the market. So because we don't plan to retire anytime soon, I feel very comfortable having a lot of our money in all these stocks and not being as conservative with our investing. If we were retiring sooner, then I would definitely shift more of my money over to something that was less volatile, because if we want to withdraw money soon, we don't want to have to withdraw when it's really far down or anything. So as you get older, the general thought is you put your money into less risky investments, which have a lower chance of a good return, but also at that point, you're just trying to have like small growth on your money and have it available for you to spend as you retire, rather than have these like big returns that you can get when you're younger, and you can ride out more like ups and downs of the market if you need to. Okay, and then the other thing I invest in is VFIFX, and that is the Vanguard Target Date Retirement Fund for 2050. So I don't know if I'll really retire in 2050. I hope to retire somewhat sooner than then. Both my husband and I do. But if we retired then, my husband and I would both be 63 years old. So kind of like, you know, average-ish retirement age. I know retirement age is getting older and older because people are living longer and they're having to work longer. But anyway, that would be age 63 for my husband and I. And this target date retirement fund is also an index fund, but it's broken up a little different than VTSAX, which is just invested in the total US stock market. So let's take a look and see how this is broken down. So currently this fund is broken down into 4 different funds. 54% is in a Vanguard Total Stock Market Index Fund. So it says investor shares, and I think VTSAX is the Admiral shares. I honestly don't really know what the difference is, but it's probably very similar. It's a total stock market index fund that's passively managed and has a low expense ratio. So actually, what's the expense ratio on this target date retirement fund? It is 0.08. So again, it's less than 0.1%. Very low expense to invest in this fund. So 54% is invested in a total US stock market index fund. 36.6% is in the total international stock index fund. So again, that's going to be a total stock market index fund for international stocks. And so you do have some exposure to the international market by investing in this target date retirement fund. And then 6% is in the Vanguard Total Bond Market Index Fund investor shares, and then 2.9% is in the Vanguard Total International Bond Index Fund. So you have exposure to US and international, all in the form of index funds. About 9% of the fund is in bonds, and then the rest is in stocks. So compared to VTSAX, where it's 100% stocks, if you invest in a target date retirement fund for this year, currently it is about 9% bonds and 91% stocks. So basically what happens with the target date retirement fund is as you get older, the fund automatically rebalances for you, which means that it invests more in bonds and less in stocks. So as you approach that retirement date, then you get less exposure to the stock market and more exposure to the bond market, which again is historically less risky but lower return. So it automatically does that for you. And that's why I really like target date retirement funds, because it's a little bit complicated to rebalance it and have to like keep track of how much you move over to bonds or keep in stocks and everything like that. So if you invest in a target date retirement fund, it does that for you automatically. So about 33% of the money in my Roth IRA currently is in this target date retirement fund for 2050. So at this point, as I continue to invest in this retirement account, I think I'll put more into the target date retirement fund and not so much into VTSAX, because VTSAX is within this retirement fund and really only like 9% of the fund is in bonds. So it is still pretty aggressive. And so, yeah, I don't feel like I need to be more aggressive. The other thing you can do if you want to be more aggressive is put your retirement date out further. So pick a target date retirement fund that is further into the future. So mine is 2050. I don't know how far out they go at this point, but 2060, 2070, whatever, pick something more in the future. And it should have a lower percentage going to bonds and a higher percentage going to stocks. So if you want to be more aggressive, you don't have to like split it between, you know, the target date retirement fund and just investing in a like stock index fund like VTSAX. You can just put the retirement date out further. I just want to mention as well, it was very easy to find out what I was invested in when I wanted to do this video. I could have logged into Vanguard, but I just want to mention the app Personal Capital. If you link all your accounts to Personal Capital, it's really easy to see like all your investments and stuff. So I just went onto Personal Capital and just checked out what my holdings were for my Roth IRA, and it just listed it out there really nicely. So yeah, if you haven't tried Personal Capital, it just tracks your net worth and gives you kind of like tips and analysis on your investments and stuff like that. So I'll link Personal Capital in the video description if you want to check them out. So yeah, that's it. I invest in these two funds. So VTSAX, and what was the stock ticker for the other one? It is VFIFX, and that's it. So it's a lot simpler than I feel like a lot of people make it out to be, especially like the financial media who's trying to get you to invest in all these crazy things because they can charge higher fees, and like it doesn't have to be that complicated. So you don't have to invest in these two things. You can invest just in a target date retirement fund. That by itself is fine. You can just invest in that one thing your whole time up until retirement, and it rebalances for you, which is nice. And like I just think target date retirement funds that are low cost index funds are really great. And then if you want to split it up like I did, you could also invest more in stocks like BTSAX or another index fund that tracks a large portion of the stock market. But again, this is not financial advice. This is just what I learned based on the research that I've done over the years. So do what you're comfortable with. And if this is new information to you, I hope it was eye-opening that investing doesn't have to be complicated or scary. It can just be as simple as investing in one fund that has a target date for your retirement date. And that's it. For the target date retirement funds, I should mention, they're only by every 5 years. So you can't pick like 2052. You either have to pick 2050 or 2055. But, you know, it's minor differences based on retirement. Just pick whatever it's closest to the date you plan to retire. So that is it for today's video. I hope you guys enjoyed this video. If you liked the video, as always, give me a big thumbs up because it really helps on my channel. And if you want to see more videos like this from me, then hit that red subscribe button. I'd love to have you as a subscriber, and I'll see you guys soon in my next video. Bye.